Gold production and the United States dollar share a complex relationship influenced by market dynamics, investor sentiment, and currency valuation. The fluctuation in gold prices and the strength of the USD impact each other and create a forceful relationship which shapes the global gold mining industry. As gold prices surge near all-time highs and the World Gold Council predicts an increase in production for 2023, understanding the relationship between gold production and the USD becomes important. Let us explore factors that link these two entities, highlighting their interdependence and their impacts on future gold mining. Global gold production has grown exponentially since the 1800s, thanks to modern mining techniques enabling large-scale production. An estimated 86% of above-ground gold has been extracted in the last 200 years. One of the most famous gold rushes in history occurred in California in 1848, when James Marshall discovered gold in the Sacramento Valley. News of the discovery quickly spread, attracting thousands of migrants to California in search of gold. By 1855, miners had extracted an estimated $2 billion worth of gold from the region, which was a milestone in gold mining history. We intend to provide current issues in 5 minutes video packs. Support us through your likes and shares and subscribe our channel as well. During the late 19th century, the United States, Australia, and Russia took turns as the largest gold producers. However, the balance shifted in the 1890s, when South Africa emerged as a major player in the gold mining industry. The discovery of vast gold deposits in the Witwatersrand Basin propelled South Africa to the forefront of gold production. South Africa's gold production reached its peak in 1970, hitting a remarkable 1,002 tons in a single year, making it the largest gold producer in the world. However, as the prices of gold rise in the 1980s, gold mining expanded globally. By 2007, China became the world's leading gold producer. Today, gold is mined in over 40 countries worldwide, highlighting the extensive nature of global gold production. In 2022, China, Russia, and Australia dominated global gold production, accounting for approximately 31% of the total output. China claimed the top spot with a production of 330 tons, followed closely by Russia and Australia, both producing 320 tons. Canada secured the fourth position with a production of 170 tons, while the United States produced 140 tons of gold. The relationship between gold production and the United States dollar, USD, is complex, involving market dynamics, investor sentiment, and currency valuation. The value of gold is denominated in US dollars. It is often viewed as a hedge against inflation and currency fluctuations. When the USD weakens, the price of gold typically rises, and when it strengthens, the price of gold tends to decrease. Gold mining operations require significant capital investment and operational expenses. Mining companies usually operate in countries where the local currency may be weaker against the dollar. A weaker local currency can result in higher mining costs, as expenses such as equipment, fuel, and labor may be denominated in US dollar. The USD's status as a global reserve currency and its perceived stability influence investor demand for gold. During times of economic uncertainty or geopolitical tensions, investors often seek safe haven assets, including gold. This increased demand can drive up gold prices. The USD's strength or weakness can impact the overall economic environment, including factors such as interest rates, inflation, and economic growth. These factors, in turn, can influence gold production. For instance, a stronger USD may lead to higher interest rates, which can increase borrowing costs for mining companies and potentially impact their production decisions. The monetary policies implemented by the U.S. Federal Reserve, which influence the value and supply of the USD, can have indirect effects on gold production. Expansionary monetary policies, such as lowering interest rates and increasing money supply, can potentially weaken the USD and contribute to higher gold prices. This, in turn, can influence gold mining activities and production decisions. Looking ahead, gold prices have been nearing all-time high, hovering around $2,000 per ounce as of April 25th. This price surge presents an opportunity for mining companies to potentially earn higher profits per ounce if their costs remain stable. The World Gold Council anticipates an increase in mined gold production in 2023, with a possibility of surpassing the previous record set in 2018 at 3,300 tons. This projected growth in production is expected to be driven by the expansion of existing projects in North America. The chances of achieving record mine output in 2023 may be further heightened if gold prices continue their upward trajectory. The relationship between rising gold prices and increased production can incentivize mining companies to ramp up their operations and invest in new projects. However, it's important to note that various factors, such as economic conditions, mining regulations, and operational challenges, can influence actual production levels. The interaction of gold production and the USD emphasizes the challenging links between global mining activity and currency developments. Because gold's value is so tightly linked to the US dollar, changes in currency valuation and investor mood can have a big impact on the gold mining business. It remains to be seen how these factors will continue to impact gold production and its connection with the USD in the future. Hit like and share if you enjoyed this video, and do not forget to subscribe our channel.